Welcome back to our next part in this video series about the 7 mistakes Canadians make buying US real estate and providing you actions or solutions to be sure that you can take advantage of this great opportunity we're seeing down south. We're here at one of the most important parts, or the most questioned part, which is the cross-border accounting negligence. Now, when you're dealing with buying assets in a foreign country, it's not as simple as simply buying a property in your own province. There's different tax regulations for across the country, just as much as there's different tax regulations between each state. So, what you need to do is understand the big guidelines when it comes to cross-border accounting. Here's a few ones you should consider looking into. Number 1, FIRPTA withholding on rental income, FIRPTA withholding on capital gains, and you'd want to look into your income tax bracket and income taxes due in the US for rental income, how to report that income, and how to make sure to get credits for whatever taxes you pay in the US that you get credited against the taxes you will owe in Canada. I would tell you it's not as scary as you would think. You just need the right people to give you the right information. So if it is a concern, since there's so many variables for each individual, I suggest to you to talk to a cross-border specialist. Now, I understand that this usually ranges between $550 to $600 to $700 per hour of consultation, but it is something that you should look into. You can also get started by going to irs.gov and looking at publication 519, the U.S. Tax Guide for Aliens. If you go there, it's going to provide you some really important things to look into when you own real estate assets as a Canadian. You'll also want to consider the trade agreements for NAFTA, which actually have special provisions for Canadians. The goal for American is to increase the investments from Canadians in U.S. real estate, and so does Canada do vice versa for Americans investing in Canadian real estate. The goals have always been to reduce borders, so things are becoming much more clear and much more streamlined, and this is providing a lot of Canadians an opportunity to go in the U.S. and take advantage of this great opportunity. You can also look into our trainings, our 3-day quests, where we cover this information and provide you some good guidelines for talking to tax specialists and very good suggestions as far as entity structuring that would be right for the average real estate holder or investor. So there you have it. If you look at publication 519, it is a very good start. Getting yourself a cross-border accountant is also a great solution, or come to one of our 3-day trainings where you can see further dates at the link below, and we'll be able to help you along the way and give you the right answers for you to go ahead with cross-border accounting. So this was video 3. The next video, we're going to talk about property management.